Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we are going to discuss Aussie US dollar as prices come up into our key level of resistance, the 0.68 handle. And you can see that price has been trading within this range for some time. Now, we did some analysis recently where we talked about the seasonality of the Australian dollar and that usually through the month of May the Aussie can be significantly weaker. However, when price approached this 0.6575 handle and consolidated, investors were surprised by a shock decision by the RBA to hike interest rates once again, and that seen the Australian dollar strengthen into this level of key resistance. And now we need to start looking at whether price is going to stay within the range or if price is going to trade outside of the range. So there's going to be a couple of different options that we could potentially form here on the Aussie US dollar. The first option is going to be the rejection of the 0.68 handle, which is going to bring prices back down towards the 0.6575, or we're going to see price trade for the 0.68, reject it on the other side and continue up to the next level of resistance, one being the 0.7 handle and one being the 0.7150. So that's what we're going to be identifying here. Now, one thing that we could potentially look for is a trading pattern on a lower time frame. So if I was to go to the 4-hour time frame, for instance, what I would be expecting around these type of zones is for some kind of reversal pattern, like a lower high or a double top or a inverse head and shoulders pattern. Something to suggest that sellers are really going to take shape here. Now we can see that the last time price came into this level, we did in fact start to press lower. We then started to get a series of sort of higher lows and higher highs, but then price did break and make a lower low, finding resistance at 0.67 and then trading to the downside. We also had this situation here where price consolidated, broke through, retested the consolidation on the other side, formed a lower high. Now we don't have any of those conditions at the moment, so what I would be looking for is some kind of lower high situation or some kind of double top situation. So I'm actually looking to see if price will trade back to the 0.68 handle and reject again. If it does, and it gives us some sign of weakness, maybe we can add sort of a technical indicator like the RSI to see if the momentum is fading. And if it is, then that could give us a sign that price can push back down towards these trendline supports in here, or that 0.67, or even back down at the 0.6575 handle range lows. Alternatively, price may break through this area here. If the Australian dollar is continuing to gain strength, it could trade through this level, pull back, double bottom on the other side, and continue to trade higher. But at the moment, we are trading within this key structural range here at the moment, so we're looking to see how price is going to react now it's back at this resistance level. If it does break lower, like we said, there is a potential for a move down to the range lows at 65.75. This is all going to be as well in line with that US dollar strength. Do we get the dollar strength back this week, or does it continue to fade? And if it continues to fade, a break above 68 is more likely at this current moment in time. So we'll have to play it by ear, but at a key range point now, we'll have to see what happens next. Hopefully that all made sense, and if it did, leave this one a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.